Alright, so guys, before we dive right in, ensure that you smash the like button and subscribe to the channel in case you are new to me. Alright, so leaving a like will actually support this video, and I will also appreciate a share and a comment. Alright guys, without further ado, let's dive right in. Now, when we talk about price action lessons, we're actually talking about how you can be profitable while you trade forex. Now, first you must understand what market structure is and how market structures are formed. You can agree with me that market structures are fond of doing this in the market. Okay, there you go. All right, so you can agree with me. We're going to say, okay, we see something like this and see something like this. Every single day we see stuff like this, like this, like this, like this, and like that. All right, so we're going to take this as, like, let's assume that this is our Asian session, right? We see, and this is our Asian session. Now, some of you might be confused, right? Asian sessions levels through which the banks actually enter contracts for the day. All right, and every single day we can find this happening every single time. Now, your ability to be able to discern what the market makers are doing is what can actually make you successful as a forex trader. All right, so we're going to the chart and I'm going to show you everything. Then I'm going to explain some of these entries to you and how why the on Friday's move was so rapid, and why I was able to predict this move. You can see that's about 83 pips, right? Even though I could not, I did not catch everything at the goal because price did not, get me in. All right, but you can remember that I shared this with you guys prior to its formation. Right, you can see that on the channel. I already sent it to the free Telegram channel as well, right? Okay, so we're going to start from this day, which is this was a Friday, Thursday, and Wednesday. Let's start from Wednesday to keep this video very, very simple. Okay, so what price action actually did after the New York session, after the Asian session was taken out. In case you've not watched my videos on the Asian session, I want you to watch the video that is showing on the card right now, or you check the video description and it teaches you about the Asian session. Okay, so now price traded of the Asian session, and at the same time why price did that, there was a mitigation there and price rallied down. Okay, so you need to understand this lesson, right? It's a simple price action and you can actually keep this very, very simple. Okay, now just watch everything I'll be doing right here in this video, and don't forget to leave a like in case you enjoy the video. All right, now we see as price rally, this is the pre-London session open, and London session just opened. All right, we see. Okay, now we can find out, we can see that there was a break in structure as price went back down, went to the downside. So we can actually mark this area. So okay, this is our structure break, so we can get ready to enter as price returns to the order block. And where is the particular order block, the source for this push down? All right, there are actually two we are spotting out right now, and the first is this particular level, this one here, while the other one is this huge candle, right? So whenever you see anyone like this, ensure that you go for the larger one first. Okay, so not in every scenario though, but the larger ones tends to hold better. Okay, remember that we're not doing any analysis on the hard time frame. We're just trading these based on the lower time frame. All right, so it is important for you to understand the institutional buyers before you do something like this. So I'm going to assume that you've already established the institutional directional bias, and then we are good to go. Now as price went down, there was something that price actually left here. Price left an imbalance right there. Now I also have a video that talks about imbalance. In case you've not watched that video, go ahead and watch it as well. Okay, so now what price actually did, as price rallied to the downside, you see there was a pushback. But remember that while price went back, there was kind of no, aside from this candle which you should have entered, gotten involved at the 50% of that candle. That's if you want to use that candle, and you see you would have gotten a few things. Now as price went back down, what we expect is, we see that there was a break in structure, and we expected that price should be able to come up again. Now why price, we expect that price should come to mitigate this run down. All right, so and what would that be? Where would that be? It's supposed to be at this level, supposed to be at this point, right? So what actually happened is that as price rallied to the downside, price went down, but it never came back down to mitigate all this. So the question is, how will you have entered this market in a real situation? Now there are two things involved. The first is just watch and sit on your hands while you see price form. While the second option is you can go to a lower time frame like the 5 minutes or the 15-minute time frame. Okay, now even on the 5 minutes there was nothing here. All right, let's go to the 3 minutes if we are going to see something. Now there are times you might not see any kind of support or a resistance. I'm using support and resistance as a kind of so that you can be able to understand. Now as in this scenario, would you have entered this trade? Well, it all depends. Now for me, if I already know that my bias is established and I know the time of the day, I will be able to get in appropriately. Now if I pull out my fib, we can find out that this never got to a premium level for us to actually enter a selling position, right? So that move would actually be missed, but I know how to manipulate my ways in the market once it's live, especially once if it has to do with what I was actually looking out for before it formed. Now as price went back down, so what you do is, as price continues to the downside, you ensure that you don't expect any reaction here yet, because you just flow along with what you are seeing. All right, so this level here could be your next point of interest. Guys, I'm giving you a good mind, so ensure that you support this video with a like, with a comment, and by sharing with others. Okay, so there could be a refinement at this level. Now you must understand this. You see, as we project this to the future, price came in, kind of reacted off of it and went above to mitigate this. Now I'm going to share with you why I had to put in these entries. And this entry, you see, this one was sniped, kind of sniped. All right, the stop were not touched. All right, and I'm going to tell you the reason. Now as price rallied back down, we see, so what you should be looking for, you should only be looking for a selling opportunity as market continues to form a lower low, lower high, lower low. And this is another day, right? This is another day, and this is a Thursday, right? So what we see right here is that after the Asian session have been formed, this is the pre-London session open. Price kind of formed this pattern, and there was a massive push down, which was a stop run, a stop run, right? And what happened to the people's orders? You can see that all the selling orders here were actually taken out by this sponsored candle. Now by implication, what you want to see is, we want to see a run off, a rally off of where the the retail trader stops, or whatever stops that are already lying here to be taken out has been taken out, right? So the market makers are actually involved in this market right now. And what happens? Price went back up, came here and rallied back up. Okay, so what this actually happened in the pre-London session. All these are pre-London session manipulations, guys. You need to be very knowledgeable for you to be able to identify pre-London session manipulations. All right, it is one of the most difficult things to actually identify in the market. Okay, so until you come to master this, guys, you are not actually ready to dive in fully. Okay, so back to this entry here, selling entry here. Now remember that yesterday, as when I mean yesterday, I mean, we traded off of yesterday into Thursday, right? So when I say yesterday, I mean Wednesday, right? So on Wednesday, what we saw is, we saw a run off. We remember we expected price to react in two positions, to be precise. Now this was the first level. This was the first level, and the second level, and probably this might be the third level. But what happened to price here? As price rallied up, the momentum was very high. There was no price actually stayed for about 1 hour 30 minutes. Also went up, tapped into this flow. Okay, why did I put this here? It's very simple. Now I know that there are buy stops that actually hanging, they're hanging fruit around this level, and you see we're already expecting something to happen at this level, so that kind of gave us a stronger confidence. And this, you can see, this is a hard time frame institutional candle. All right, this is a high time frame institutional candle. And what actually happened, I expected that price should come and react to this level before dropping, but unfortunately this particular one was not tapped in, but rather I also refined this that it might be tapped in. And what happened, price came, took out all this high. Now by the way, you should understand that all these high retail trading patterns are like the channels, and let me show you the channels, the trend lines, and so on, right? The channels, look at that, boom. Now all these manipulations that the market makers are actually they actually do this purposefully, because they know that most of us will be buying why all these things form, right? So many people will be buying here, they will sell here, they will buy here, because the channel, right? They will sell here, they will buy here, they will sell here. And what happened, immediately they saw their price pushed up with full force to take out some stops. Believe it or not, there were some stops that were lying here, and what happened? There was a rundown. Now why price went down, people will be buying here as well, and what happened? There was a run off. You see, this move here would have played with the emotions of all the buyers at this zone, and what happened? Price never went up again, but rather boom, it took them out as well, right? So all these are a price action that anybody can, once you are able to understand this, you can be really you can be successful. Okay, now we're going to remove that, and that's why you see that move here. So coming to Friday, before we round it off, remember that you just have to leave a like and a comment. Okay, all right, they actually help. It tells me that the people I'm making this video for, they are actually following. Okay, so what do we see after the move off of the London session? All right, we see that there was a run off liquidity. There was liquidity around this level. I also have a video that talks about liquidity on my channel. You can go check it out as well. Now we see that there was a runoff at this level. There was a runoff liquidity. You see, so we expected that there would be a reaction. Actually expected that price should be able to take out these highs. After taking out this high, price should be able to retrace down before going to the upside. But what happened is that market can never present to you same setup every single time. All right, that's why you must understand the game. If you want to stay long enough, understand what you know, understand the strategy. If you want to learn smart money, stick to it. You want to learn retail trading, well, go and try retail trading as well. All right, but believe me when I say retail trading actually created for you to fail, because it's a platform that the market makers uses to to take a lot of stop losses out of the market. Okay, so looking at this is where you see I said possible entry, use the same stop loss, because I actually sent these to those in the FXTD Academy, and you see this was where price were before I actually sent this, and it was actually a nice move, of which majority of them caught the move about 38 pips to 40 pips, and though I expected that price should be able to retrace, but it's unfortunate that price actually retraced once it immediately got to the level where I expected it retraced. But it's unfortunate that price never tapped into any of the entry. All right, like I mean the kind of should I say is a buy limit, well, any of this, right? But most of the students actually sent me charts that they were able to get in, right, which is exciting. And what happened, you see, this is Friday, and Fridays, Sundays and Mondays are actually used for manipulating the market. It takes high accuracy for you to be able to trade the forex market with knowledge. Like when I mean with knowledge, I mean you don't just trade any other block you see or anything you see. Okay, you trade it based on knowledge. There are lots of things that you must understand as a smart money trader. Now, why is it that this level did not hold when price got to it, though there was a kind of rejection? Right now, it's very simple. One of the reasons is that the fact that this level has been respected, I really don't expect that this level should also be respected anymore. Right now, we can see if we project this imbalance to the future, you can see that there was a massive candle that actually filled it up with full momentum, right? So that is a sign of strength. Now, understanding these things can actually give you an edge, a positive edge in the market whenever you trading, right? So this is it. ICT price action for a strategy. Just ensure that you watch the videos on the end screen, subscribe to the channel, and check below for more tutorials. And God bless you. Remember that we have a meeting coming up soon, so join the free Telegram channel and share the banner as well. Okay, and peace.